Good morning and welcome back to Almus Market Mornings. We carry into this week a few important updates from the previous. India's Q2 GDP had a good showing with growth coming in at 8.2% year on year, though there is a serious evident base effect because the previous year was marked by unusually low figure. But this keeps things tricky for the central bank, which is meeting this week to set interest rates. There's a strong consensus building that they might cut rates. Friday also had an interesting development where an outage at CMA's data center halted trading for a lot of derivatives, including that of precious metals. We saw a solid rally in both gold and silver, with silver now at all-time highs. Good morning, JK. We ended the last week strong for risk assets, but towards the close saw good rally in precious metals as well. What's the setup looking like for this week?
Good morning, Swaraj. We are starting the week on a very strong note for the precious metals, no doubt. So what we are seeing is the continuation of the debasement of fiat currencies, and that's fully expressed in gold and silver prices. What's really happening is it's gold and silver are not only gaining against dollar, but they are also gaining against other currencies because they are all also in a range. And particularly in silver, which had almost a 12% rally last week, and that's the highest in this whole bull cycle that we have seen. Whereas gold also moved about 4% higher. Now, the important ratio that market looks at is the gold versus silver ratio. And that is also at a very key support level because silver has gained a lot against the gold as well. So if the current level, support breaks, I think we can see a much larger move in silver. Large investors do have targeted 65 for silver. And of course, gold will move along with it, but silver will have a much more, gains if that support holds, or unless we have some, bullish development for the dollar. Any profit taking is likely to be temporary. And besides, the moves in gold and silver not only led by investors, but it's also darling for traders because every day you do get a 2 to 3% movement, and that is also keeping the metals very volatile as well. And now with the Fed rate cut indications on in December, also gaining ground. I think the further gains are very likely. So we are also entering a very dicey month of December. Sometimes things get more volatile because of positioning, or if there is some big news. Sometimes the latter half of the month also sets the tone for next year as well. So we will, of course, have to be nimble in this month. Probably most likely the trends that have been in place for the year will consolidate, and will probably see a new trend when the market gets into more liquidity in the new year. But that is something we have to keep ourselves a bit open as far as December is concerned. In fact, this is also a month where we have a major policy decisions from the Fed, the UK, Bank of Japan, and of course our own RBI. And all the four major central banks are likely to change the policy rate. BOJ, of course, the odd man out with a hike possible, and others likely to cut rates. These decisions are, of course, well discounted. Normally, should not have any outsized reactions from the market, but I do see, uh, market looking ahead to the central bankers for forward guidance, uh, because they do not have updated information on the economy, particularly in the US. And whatever data we are going to get this week on the PCE, etc., are also going to be stale, pertaining to uh, September. And we are only going to give more weightage to private data like ADP, and also the ISM reports on manufacturing and services that could give some indications on the economy. Or also we'll have the updated data on Eurozone inflation and Eurozone GDP growth. On Friday, we had the German inflation coming at slightly lower levels, and employment slightly picking up, but at the same time retail sales was lower. So a mixed economy, and so out of other than the four central banks mentioned, ECB is likely to keep the rates unchanged. So the one major central bank is probably going to keep the rates unchanged as well. Uh, and of course, the Indian GDP number was a whopping 8.2%, beating all expectations, which were between 7.3% and 7.5%. And the same period last year, the July-September quarter of 2024 had actually seen, 5 odd% of growth, and that's a very big jump. Yes, as you said, the base effect is very prominent in this. Of course, in this data, we also see a big rebound in the manufacturing at 9.1% versus 2.2% of last year. Private consumption at 7.9%. Services growth was good as well. But what is, beyond the headline real GDP, the nominal GDP growth is actually worrisome. And this actually came at 8.7%, which is well below the 10% nominal rate that is assumed by the government in their budget calculations. So there is going to be some sort of a challenge to meet the fiscal calculations, and even for the economy, because the low inflation also means that the real rather than nominal growth is also now lower. That means even uh, assuming even calculating the GDP along with the inflation, including the price effect also, it's not much higher. So this can also have some implications for the corporate earnings and margin pressures for the companies, and eventually the large scale investments that depend upon rising valuations and nominal growth expectations can also get affected. So that's one negative aspect of the GDP growth. uh, as far as the markets are concerned, the rupee, I don't think GDP is going to be a big market mover. In any case, the rupee has been moving on one single factor, that is the flows, and because there has been no real inflows. Even the exporters keeping a low profile once again after break of 89. Import, or rather the buying pressure is much larger on every dip, and RBI is actually having to do the heavy lifting for the meeting the demand. So that keeps the rupee actually on the defensive side, no doubt. And of course, it all boils down to where RBI wants to cap the rise in the dollar for the time being. I say for the time being because unless we see a shift in the flow pattern, that action of RBI will continue. Of course, one can also look out for any policy measure from the government or RBI to augment the flows and contain rupees fall on a more sustainable basis. But probably that takes some time. Perhaps we can see something coming in the budget, which will be a little more than 2 months from now. Of course, even any gains in the rupee due to broader dollar fall, or let's say even a trade deal, can only be temporary. And technically, the next target is definitely at 90 psychological level. Hopefully, by then we have a shift in the FI flows, because now the markets at least are looking good for more gains. There is increasing number of analysts calling for bottom in the earnings of companies, and for markets to move ahead to new highs at this from these levels as well. So rupee bides its time, and waiting for some new development to change the trend. Otherwise, the trend will be very much on the weaker side. Finally, of course, the technical breakdown in the premium global exchange of CME data center. That's a very big risk that the market carries. Thankfully, the breakdown did not carry beyond the intraday, and it got restored, which means people had opportunity to adjust their positions. Otherwise, this is a huge risk. And one more thing we should be thankful is that there was no major economic or global development that would have changed the price or affected the price. So markets did not have a big risk. Otherwise, it would be similar instances can actually carry a much larger risk. Hopefully, the much better risk management is done by people who are managing the technical support in this regard. Thank you.
Thank you, JK. And just quickly summarizing, we begin December, of course, a new month, and there are four, 5 major central bank meetings with majority expected to change rates. BOJ with a hike, BOE, Fed, and RBI with a cut. ECB expected to keep rates unchanged. So that's a theme we start off the month with. Apart from that, we are also starting off the month with a solid rally in precious metals. Large breakout in silver, and that might actually fuel more of the rally because silver is a very high delta commodity. We also looked at the Indian GDP figures, and we looked at the real and the nominal figures. And of course, Rupee did not pay much heed into these macro numbers. The flow is keeping the Rupee weaker due to lack of major inflows. That's it from us today. Thanks for listening. We'll catch up tomorrow with the fresh round of updates.